Wall Street indexes incurred heavy losses in October. Investors are revising their portfolios with apprehension. They will receive important clues later today. Before the opening bell, the ADP employment report provided a piece to the puzzle. The market will find missing pieces during the New York session, and the policy decision of the Federal Open Market Committee, Jerome Powell's press conference, and the Treasury's quarterly report on reimbursement will take center stage today. The benchmark stock indexes closed yesterday in the green. The S&P 500 climbed by 0.65% to close at 4,193 points. Wall Street indexes were wound down by rising yields of US Treasuries in the New York pre-market, but they managed to regain some losses before the opening bell. Futures on the stock indexes were 0.2 and 0.12% down in the pre-market, as investors were in the wait-and-see mood. The intraday calendar of the S&P 500 will depend on a few factors today: Powell's dovish rhetoric and the lack of surprises from the Treasury Department might push the index back to 4,220 and higher to 4,240 points. On the other hand, the Fed's hawkish rhetoric and extra support from Treasury yields might drag the S&P 500 down to 4,120 under selling pressure. The likelihood that the index will resume its growth rests on the prediction that the Federal Reserve will refrain from further rate hikes this year. The market optimism was cooled down by the U.S. Employment Cost Index, which logged a considerable increase in the third quarter, as well as by disappointing reports on the U.S. corporate profits and losses. In the corporate sector, shares of a heavy equipment maker Caterpillar tumbled by 6.7% as signs of a slowing demand overshadowed quarterly earnings. Nvidia shares closed above an intraday low, but still lost 0.9% on concerns that the latest US lockdown could force the chipmaker to cancel billions of dollars in orders to China. A modest rise in Treasury yields on Tuesday led all 11 major S&P 500 sectors higher, with the real estate up 2% to lead the gainers, while the worst-performing communication services sector inched up by 0.2%. The New York pre-market today promises a gloomy start to November. Futures on the stock indexes went down, but the ADP employment data helped indexes offset losses. The ADP payroll processor reported that the private sector added 113,000 jobs in October. The figure is below the forecast of 150,000 jobs. At the same time, employment growth exceeds the benchmark range of 70,000 to 100,000. After the opening bell, the market will get to know JOLTS job openings and research on manufacturing activity. The highlight of the day is certainly the policy decision of the U.S. rate setting committee. The Federal Reserve is expected to stand pat on interest rates, so investors will shift focus to the press conference by Fed's chair Jerome Powell, and today he will hardly open the door to further rate increases in a light of upbeat economic data. Now, investors are trying to puzzle out how long interest rates will be kept at the current levels. Despite the expectations of the hawkish Fed's rhetoric and hints about another rate hike, the policy statement will hardly come as a bombshell. In this context, it makes sense to turn attention to the Treasury Department's report on a quarterly reimbursement. Bearing in mind the sharp rise in the long-term treasuries in recent weeks, analysts foresee an increase of auctions held by the U.S. Treasury to sell bills, banknotes, and bonds to fund the mounting budget deficit. If the forecast comes true, this will enable a further rise in the yields of 10-year treasuries. In turn, stocks will come under selling pressure. Meanwhile, yields of benchmark treasuries climbed to 4.905% and later dipped to 4.875%. In the currency market, the US dollar appreciated against its rival currencies. The US dollar index added 0.32% to trade at 107 points. Notably, its trajectory could reverse sharply by the closing bell if Jerome Powell makes dovish hints. The US dollar index might either decline to 106.50 and lower to 106.30, or rebound to its former high of 107.30 and even test 107.60 points. The balance of trading forces in major currency pairs might also change dramatically after Powell's speech or after remarks of the Treasury Department on how it intends to fund its huge budget deficit through the bond market. The Canadian dollar is extending its malaise. It's sticking to its weakest levels of the year. The USD CAD pair inched up by 0.05% to trade at 1.3880. The instrument is expected to trade in the intraday corridor between 1.3850 and 1.3920. The Canadian economy got stuck in August and perhaps dipped into a minor recession in the third quarter. The data released on Tuesday confirmed such a forecast. The GDP proves that the cycle of 10 rate hikes pursued by the central bank since last year has been already taking its toll on the economic growth. According to flash estimates, the Canadian economy might have stagnated in September. StatScan agency reported a 0.1% decline on a year in the third quarter. It means contraction for 2 quarters straight. Bank of Canada's Governor Tiff Macklem and Deputy Governor Caroline Rogers are due to speak later today. Bearing in mind the previous rhetoric, their remarks will hardly help the loonie to gain ground. Earlier, Tiff Macklem said that monetary policy was meant to cool down the economy and ease inflationary pressure, so the Bank of Canada wants its policy to bear fruit over time. The crypto market is also in suspense, looking forward to the Fed's policy decision. Bitcoin is trading flat. It fell by 0.4% to $34,510 before the opening bell. Importantly, the number one crypto surged by 28% in October as investors anticipated that the US Securities and Exchange Commission would approve a spot Bitcoin ETF in the United States. Analysts come up with various forecasts projecting a capital inflow of $3 billion on the first day and up to $55 billion during 5 years. Today, crypto investors alert to the decision of another regulator. The Fed's dovish rhetoric and the positive news for risky assets could enable Bitcoin to surpass the landmark level of $35,000 and even climb to $35,200. The alternative scenario suggests a decline to $34,100 and $33,900. The most pessimistic scenario is a fall to $33,500. Keep close tabs on financial markets on the InstaForex TV channel. Your feedback is appreciated. Good luck in your trading and see you online tomorrow.